Good morning, ladies and gentlemen. Welcome to the IRB Infrastructure Developers Conference Call for discussing the audited financial results for the quarter year ended March 31st, 2022, and recent developments. We have with us on call today Mr. Virendra Mhaiskar, Mr. Carlos Ugarte, Mr. Jose Tamaris, Mr. Dhananjay Joshi, Mr. Anil Yadav, Mr. Mehul Patel, Ms. Poonam Nishal, and Mr. Tushar Kavedia. As a reminder, all participant lines will be in the listen-only mode, and after the opening remarks by the management, there will be a question and answer session. Please note that the duration of call would be 45 minutes, and any queries left unanswered after the call can be subsequently mailed to the management for adequate response and resolution. Please note that this conference is being recorded. I now request Mr. Mhaiskar to give you an overview of significant developments during the quarter. Thank you, and over to you, sir.
Yeah, very good morning to all of you. I would like to welcome all the investors and analysts on this conference call. Hope you have all been able to go through the detailed numbers as well as the presentation that was released by the management last evening. In the quarter gone by, capitalizing on the strong tailwind of massive capital raise of 5,347 crores, we have achieved improvement in ratings across IRB Group. Even Fitch Rating has upgraded the international long-term issuer default rating on IRB infrastructure developers to BB+ from BB with a stable outlook. This effort has helped us to negotiate better interest rates across projects. This will lead to an overall saving of more than 100 crores annually for its subsidiaries. Details of the same are provided in the corporate presentation. We are pleased to inform that Palsit-Dankuni Tollway project in Bengal has received the appointed date from April 2nd, 2022, and the toll collection on the project has also commenced, and the collection numbers are in line with our projection. Implementation of the project will be through private trust. We have completed the rights issue of 243 crores in the private trust, and proceeds of the same will be utilized for this Bengal project. The company, being the sponsor of the private trust, will continue to hold 51%, and GIC affiliates will continue to hold balance 49%. And accordingly, they have invested 119 crores as part of their share. Vadodara Scheme Expressway, implemented by VK1 Expressway Private Limited, wholly owned subsidiary of the company, has been issued a provisional completion certificate by the competent authority upon substantial completion of the work. Consequently, the SPV is eligible for receipt of biannual annuity payments from NHAI for the period of next 15 years. It is one of the first projects of the prestigious Delhi-Mumbai Expressway corridor to achieve provisional completion. We have also received PCOD2 from NHAI for additional length of approximately 20 kilometers for the IRB West Coast project from Karwar to Kundapur. Pursuant to that, the toll tariff for the project has been revised upwards by 10% from 5th of March. We are pleased to inform that the arbitration awards for Amritsar Pathankot and Panji Goa projects amounting to 418 crores and 370 crores respectively have been upheld by the Honorable Delhi High Court in favor of the company, dismissing the appeal by NHAI. Third wave of COVID in India had some impact on the traffic, especially on the car traffic in the month of January 22. Our per day collections, however, have now improved to over 53 million for the quarter ended March 22 as against 50 million per day for the quarter ended March 21. The growth during this quarter was 6% year on year. During the month of February and March, Mumbai, Pune and Ahmedabad-Vadodara projects have clocked a traffic growth of over 8% and 6% respectively as compared to some months of the same month of the previous year. We have received toll revision of approximately 10% from 1st April 22 for the year FY23 in line with the concession agreement for Ahmedabad-Vadodara private InvIT projects and 4 of the public InvIT projects. High inflation will benefit operational projects as the operations and maintenance cost is only to the extent of 10 to 12% of revenue. Impact of inflation on under construction projects, I would like to add some light on this. For HAM projects, during the construction phase, the escalation to the extent of 40% is provided by NHAI and the balance 60% by IRB or lenders as the case may be. During the operations period, IRB would be receiving the annuities from NHAI for the balance 60% adjusted to escalation with interest, thus making escalation a complete pass-through. As far as BOT projects are concerned, we have seen 3 major materials, that is bitumen, cement and steel, witnessing a price rise of 20 to 25% over the last 6 months on an average. These materials constitute approximately 20% of the total project cost. Hence, the impact of these materials on total project cost is around 4 to 4.5%. We have sufficient escalation inbuilt in our estimated cost of the BOT project to cover the rise in material prices. We have witnessed some bidding activity during Q4 of FY22, which included a few BOT and large number of HAM projects. We have participated in the BOT projects but not participated in HAM projects due to intense competition in bidding. Most of the HAM projects were awarded below NHAI TPC as against 20 to 30% above as the case used to be. The total order book of the company is now around 16,000 crores, of which 10,000 odd crores pertains to EPC. This strong order book provides good visibility for the next 2 to 3 years. In the future as well, we will only bid for projects that have potential to create value for our stakeholders. We are pleased to inform that we have received final sanction from lenders for the financial assistance sought for the Ganga BOT and Ganga Expressway BOT project and Chittoor-Thakur project. Upon completion of the documentation, we will soon be announcing the financial closure for these projects as well. To facilitate our strategy to achieve sustainable growth, we intend to churn assets and unlock value to fund the future projects. To achieve this, we intend to offer eligible assets to public InvIT at regular intervals going forward. To discuss this opportunity, we intend to submit a concept paper to the public InvIT management soon. Post their review, we will try to reach out to all stakeholders to enlighten them about the opportunity and seek their views on it as well. This effort will put IRB on a self-sustaining growth trajectory. I would now request Tushar Kawedia to give an overview of the financial performance of the company. Over to you, Tushar.
Thank you, sir. Now I'll present the financial analysis for Q4 FY22 versus Q4 FY21. The total consolidated income for Q4 FY22 has increased to rupees 1,683 crores from 1,650 crores, registering a growth of 2%. The consolidated toll revenues for Q4 FY22 has increased to rupees 510 crores from 488 crores, increased by 5%. The consolidated construction revenue for Q4 FY22 has increased to rupees 1,173 crores from rupees 1,162 crores, registering a growth of 1%. EBITDA for Q4 FY22 increased to rupees 891 crores from 805 crores, registering a growth of 11%. Interest cost has decreased to rupees 399 crores from rupees 451 crores in Q4 FY21. Depreciation has increased to rupees 189 crores in Q4 FY22 from rupees 177 crores in Q4 FY21. PBT has increased to rupees 303 crores in Q4 FY22 from rupees 176 crores, registering a growth of 72%. PAT after share of JV has increased to rupees 175 crores from rupees 97 crores, registering a growth of 79%. Earning per share on basic and diluted basis, excluding extraordinary income, has increased to rupees 2.89 per share from rupees 2.77%, registering a growth of 4%. I'll also present the financial analysis for year to year, that is for FY22 versus FY21. The total consolidated income for FY22 stood at 6,355 crores as against rupees 5,488 crores, registering a growth of 16%. The consolidated toll revenues for FY22 has increased to rupees 1,877 crores from rupees 1,665 crores, registering a growth of 13%. The consolidated construction revenues for FY22 has increased to rupees 4,479 crores as against 3,822 crores, registering a growth of 17%. EBITDA has increased to rupees 3,349 crores from rupees 2,702 crores, registering a growth of 24%. Interest cost has increased to rupees 1,891 crores in FY22 from 1,692 crores in FY21. Depreciation has increased to rupees 683 crores in FY22 as against rupees 582 crores in FY21. PBT excluding extraordinary income has increased to rupees 776 crores as against 427 crores, registering a growth of 82%. PAT after share from JV has increased to rupees 361 crores from rupees 117 crores, registering a growth of 200%. Earnings per share on basic and diluted basis, excluding an extraordinary income, is increased to rupees 8.69 per share from rupees 3.33%, registering a growth of 160%. Now I request moderator to open the session for question and answers.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Mohit K. from DAM Capital. Please go ahead.
Yeah. Good morning, sir. And congratulations on a good year, especially on raising the money from strategic investors. So my first question is, what is the revenue, EBITDA, and profit and total debt for the private InvIT for FY22?
Yeah. Private InvIT, you want EBITDA, profit?
Revenue, EBITDA. Revenue, I think, to 12 billion, right, for the entire year?
Yes. So in terms of private InvIT, Mohit, the profit will be basically if you look at IRB's whole year's share of loss is around 226 crores and divided by 51%, so roughly 400 crores loss was there in the private InvIT. Out of that, close to 200 crores was pertaining to loss on account of fair valuation, and around 200 crores was the loss from the business. And as we have seen a toll rate revision across the private InvIT project, and couple of projects has got completed during the year. On backdrop of this, next financial year, we expect loss to come down in range of around 70 to 75 crores. For
Is it possible to share the EBITDA and debt number of the private InvIT?
Debt number is 9,500 crores. We will shortly share the EBITDA number.
So EBITDA number for full year was 710 crores on a consolidated basis for trust.
Understood, sir. And so what is the status of IRB Hapur Muradabad road? I think it was supposed to start from May, somewhere May. Is that the right understanding?
So the project is about to achieve its PCOD. We are expecting it to happen in this first quarter itself.
Understood, sir. And sir, given that the order book is around 10,000 crore, how do you expect the EPC revenues to pan out in FY23, and what kind of margin we should assume for FY23?
So what we are expecting from a construction revenue, the revenue should be, because now the new projects have already achieved the appointed date and the financial closures are in place. The construction revenue is expected around 5,500 crores for next year, considering all 5 new projects starting its construction. And the EBITDA margins, what we are expecting are somewhere between 24 to 26%.
I think, Mohit, you'll appreciate that we will have around 3 projects of HAM under construction, and as we have guided in past also, HAM will have lower EBITDA margin. So considering the blended EBITDA margin, it will be around 20 to 23%.
Understood, sir. Lastly, on this Ganga Expressway, have you finalized the project cost, and what is the expected timeline for the implementation?
For Ganga?
Ganga Expressway, yeah.
Ganga, I think sir has already explained that we have achieved we are advanced stage of achieving the financial closure, and once the financial closure is achieved, we expect to start the project.
As I said, the total debt component will be close to 2,700 crores. The total equity will be around 2,200 crores, and 1,750 odd crores is the grant.
Understood, sir. Understood. Thank you, sir. Best of luck. Thank you.
Thank you. The next question is from the line of Vibhor Singhal from Phillip Capital. Please go ahead.
Good morning, sir. Thanks for taking my question, and congrats on constantly improving financials and our balance sheet. Virendra, my question was basically on something that you just alluded in your opening remarks about basically taking the proposal of transferring assets to the public InvIT. Could you just throw maybe a little bit more light on this? That as of now, whatever projects that we have in the private InvIT, as and when they get operational, is it that we are looking to transfer them one by one, of course, subject to pending approvals from the shareholders and all? If you could just throw light on them, then how do we intend to start the process, and which projects do we intend to probably begin the process with?
Morning, Vibhor. I would request you to patiently wait for 2 more days when the paper come out, which will throw full clarity on the project that would come up. I can only give you a fair idea that the kind of value unlocking or kind of sizing that we are thinking of offering to the public InvIT would be in the range of around 2,500 crores. That's the kind of sale proceeds we envisage from sale of projects, because the effort is a very detailed effort that will go into the process, and that's the kind of sizing that we are looking here.
Got it, sir. But I think the overall, so let's maybe asking for a generic comment in that sense. So our endeavor would be that going forward, as and when we take more projects, they first go into the private InvIT, and when they become operational, we give the public InvIT an option to buy them out. Is that the right understanding?
So, in a generic manner, what I would say here is that while we are strongly back to the growth phase, this time around we want to churn the assets and grow. Thereby, we achieved 2 major objectives. One, the growth gets funded from the churn of assets, which would unlock the capital that was deployed in those projects. And as a result, the construction profit that used to get reinvested back into the project for partly meeting the equity component would now remain free with the company for reducing the debt or for distribution to the shareholders. This will be, to my mind, a tectonic shift in the way the business has been conducted in the past and how it will be conducted in future. While growth will come from churning of assets, the construction profit remains available for reduction in debt or distribution. So this is the prime structural change that we are going to try and bring into the business.
Got it. And HAM projects would generally remain out of the ambit of the public or private InvIT. They will remain with the parent company, at least as of now.
That's correct.
Got it, sir. So just a couple of bookkeeping questions, if I may. Would you be able to tell us what is the total gross debt at the end of the year? And out of that, how much is SPV debt and how much is debt at the standalone level?
Yeah. So we bore with respect to debt, if I can explain you the project-wise debt. Mumbai Pune has 6,400 crores debt. Ahmedabad Vadodara is 3,000 crores debt, and close to 900 crores debt is.
Ahmedabad was how much? 3,400.
Ahmedabad Vadodara 3,000 crores.
3,000 crores. Okay.
Close to 900 crores is in VK1. So that is the SPV level debt. And IRB, including the overdraft, we have roughly 3,500 crores debt.
Okay. So that basically, so that takes us the total debt to be around 14,000 crores.
13,800 crores to be very precise.
13,800.
Yes.
Got it, sir. There has been no draw. There has been only drawdown in the VK1. No other HAM projects or any other projects. There has not been any drawdown.
So VK1 is now on the completion. There is hardly amount left for disbursement. So that will be drawn in this quarter.
Got it, got it. And Powership will not be consolidated, right? Powership and Dhankuni would be part of the private InvIT. So it would just come as a JV/associate.
That's right. That's right.
Got it, got it. Sir, just one more clarification on the other income. So the other income in this quarter was also significantly higher on the higher side as compared to our usual run rate. Now, last quarter, of course, we had a 170 crores of fair value gain. What explains the high other income in this quarter, given that we also reduced the debt in this quarter, so the interest income would not have been much high, maybe?
Other income includes close to 170 crores interest received on award received for Panji Goa project. So that has led a higher income of 170 crores. But if we look at the one-time expense also, we have one-time expense of close to 160 crores. Out of that, roughly 30 crores pertains to Panji Goa, and roughly 125-30 crores pertains to the issue expenses for the preferential allotment. And there is close to 50 crores of additional interest expense higher in this quarter because of the prepayment charges, some transaction cost reversal, and some initial days interest for loan which got prepaid in the month of January.
The last 150 crore debt repayment that we did as a part of the capital raise, Ami was mentioning about that repayment.
Got it, got it. And then this 160 crores of exceptional expenses, this would have been a part of other income, right? So 170 crores of exceptional income and 160 crores of exceptional expense, they kind of negate each other. Despite our other income was around 240 crores.
Yes.
So just wanted to check, sir, what takes the other income so high, or is that going to be the normal run rate going forward as well?
No, it was based on the arbitration award of Panji Goa, where the court has awarded an interest also. So that interest forms part of the other income. That is amount of 170 crores. And on expense side, it's one-time expenses close to 160 crores. So both negate each other.
Right, sir. That's what I'm saying. So if I negate each other, then the net difference is only 10 crores. Right. So these are both exceptional items. So if I remove 10 crores also, then also our other income for the quarter is 240 crores.
No. In 240, you have to remove 170, na? So the...
okay, 160 is not in that. 160 is in financial expense.
Yes, because those are not netted out. So on the expense side, there is 160 crores.
And that expense side will be in which line item?
I think there will be some in the office admin, and majority of will be in the direct expenses, because whatever the expenditure was done for the Panji Goa, that also we have written off during this quarter.
Got it. So that clarifies. That really helps. Great, sir. So just one last question. If you could just maybe give the breakup of the order book. The EPC order book is right now almost 10,000 crores. So if you could just give us that, what is the total composition in terms of, let's say, the 4 HAMs, Powership and Ganga Expressway?
We have EPC order book of 10,500 crores and O&M order book of 5,500 crores.
Right.
And
So in the 10,000, yeah, the 10,500 crores, if you could just give the breakup of broad projects, HAMS, Palsit, and Ganga.
So if you see out of 10,000 crores, the EPC order book on the BOT project, that is Ganga and Palsit, is somewhere around 5,000 crores, and the balance is to 5,500 crores, and balance is for 4 projects of HAM is around 4,500 crores.
4,500. Great, sir. Thank you so much for taking my questions, and I wish you all the best.
Thank you. Ladies and gentlemen, to ask a question, you may press star and 1. The next question is from the line of Prem Khurana from Anand Rathi. Please go ahead.
Yeah, thank you for taking my questions, and congratulations on good set of numbers during the quarter. Sir, most of my questions are kind of bookkeeping, so bear with me, please, if I ask something on balance sheet. So to begin with, I want to understand, when I look at the balance sheet this quarter, it seems as if there have been substantial movement in our property, plant, and equipment, and at the same time, so we've never had this large a receivable for us when I look at the historical number. So what would explain this large receivable? Almost around 600 odd crore rupees of non-current, and then there's current of around 1,000 odd crore rupees. I thought, given the fact that we're working for our own SPVs, payments would always come on time, except for barring for some slight delays if there's any delay in disbursal. But 1,600 odd crore rupees of receivables seem to be fairly large. And then we've never had this large a number, at least in the past, with us.
The receivables, what you are looking for is, from the receivables from IRB or the Concall perspective, those are mostly from the SPVs for which the construction work is done. So there the receipt of payment is hardly takes 1.5 months to 2 months. Whereas what you are seeing as outstanding is some portion of the receivable which has to come from NHAI side on account of some COS works and the utility shifting works. So that takes slightly longer time than the normal time, and that's why they are being reported for a period where we have more than 12 months now outstanding as a non-current receivables.
Sure. So this 600, which is reflecting as a part of non-current, would mostly be COS, right?
COS and utility shifting, you're right.
Sure. Okay. And how about this one, the fixed assets, property, plant, and equipment? So September figure was almost 122, and this has increased to almost around 950 odd crore rupees.
So this is on account of the capitalization of the airport project, which has led to the increase in this land, property, plant, and equipment.
Oh, okay, sure. And sir, has there been any restatement in our order backlog? Because if I remember numbers correctly, last quarter it was almost around 18,500, and this quarter it's around 16,000. And when I look at the Q4 number in terms of EPC revenue that we booked, it's around 950 odd crore rupees. So even if I were to adjust, let's say 1,000 out of that 18,500 last quarter number, ideally it should have been around 17,500 odd, but the presentation is reflecting it around 16, and there's a sharp drop on a sequential basis in the O&M order backlog from almost around 6,300 to 5,500. So what would explain this? And also a small clarification on the number that you gave, split in terms of BOT and HAM. So you said BOT is around 5,500 crore rupees in the core EPC order backlog of almost around 10,500 odd. But I thought your Ganga in itself was almost around 6,000 odd crore rupees, and Palsit should be over and above Ganga. So why is this number 5,500 for BOTs?
Prem, I think with respect to first, I will explain the rationale why the order book has come down, and then we will go in the split of the order book.
Sure.
So we have basically earlier the contracts between SPV were including the GST, and now those contracts are excluding the GST. And most of the peers are not taking GST in their order book, and we have tried to align the order book in line with the peers. And during the quarter, we have done an adjustment of GST. Almost order book would have been reduced by 12%. So as you rightly mentioned, the Ganga was 6,000, including the GST. And if roughly 1,200 to 1,300 crores is reduced, the Ganga comes down to close to 4,500 to 4,700. And Palsit Dhanpuri, which was close to 2,400 crores, that has also come down to close to 2,000 crores. So that Tushar was explaining that BOT order book is roughly 6,300 to 6,500 crores, and roughly balance 4,000 crores is the HAM order book. And the similar adjustment is also done in the O&M order book.
Sure, sir. Sure. But given, so I mean, earlier when we used to report our numbers on EPC side, I mean, were these numbers, I mean, revenue numbers including GST or excluding GST?
Earlier it was including the GST. Now these numbers are excluding GST.
Sure. So technically, given the fact that the tax GST tends to be a pass-through, ideally, I mean, at least on an optical basis, the EPC margin should look better because, I mean, you would report your numbers net of GST, which essentially was a pass-through earlier. So, I mean, absolute EBITDA would still be the same, but then percentage ideally should look better or not?
Yeah, so EPC margins will look better with this particular change in the treatment.
Sure, sir. Okay, sure. And just one last, if I may, I think if you could explain this sharp jump in net debt number. I think it's from 9,300 odd, it's gone to 11,000 odd, so which is almost around 1,800 crore rupees. So 500 crores I understand is because of the payments that you would have made to the authority for Mumbai, Pune, and what would explain the rest of almost around 1,300 odd crore rupees of rise?
Same as we explained the last quarter also, 1,600 crores of prepayment was done in the month of January. While with the December number, you have to adjust for 1,600 crores. And as you rightly mentioned, we have drawn a debt for Mumbai, Pune. If you will adjust for these two, then automatically the debt number gets reconciled.
Okay. No, I was looking at the net debt number, so I mean,
net debt, because
whether I was repaid in January or not, so yeah.
Yeah.
No, it's okay. I'll take it offline, Anil sir. Thank you. That's it from my end. Thank you.
Thank you. The next question is from the line of Parikshit Kandpal from HDFC Securities. Please go ahead.
Hi, sir. So my first question is on EBITDA margins. So you said that the EBITDA margins, I think Tushar sir would be about 22.
Mr. Kandpal, but your voice is not clear, sir. There is a lot of disturbance from your line.
Hello, is it better now?
Yeah.
So this EBITDA margin, Tushar mentioned about 24 to 26%, and Anil sir, you had mentioned about 20 to 23%. So what is the guidance here?
So as you mentioned that the mix, because now for the new next year, the mix would be like HAM and HAM projects are also there. Earlier it was only one project, and now there will be four projects for this particular year. That will lead to slightly lower margins because those projects have a lower margins.
So 20 to 23%?
Around 20% of EBITDA margin.
20%. 20%.
24.
Okay. So second question is on the loss funding of the private InvIT. Have we done any loss funding this year? Because we had about 400 crores of losses. So if I assume 200 will be non-cash in nature, so balance will 200 crores of operational losses. So any shortfall in debt servicing or anything done in this year on private InvIT?
Parikshit, as you are aware that in BOT projects, majority of the losses is on account of the amortization. If you look at the amortization of the private InvIT, that would have been in range of more than 300 crores. On net basis, it would have been the cash positive itself.
Okay. So there's no loss funding because it was taken care of by the amortization.
Yes. So private InvIT for this year, it was on self-sustaining basis.
And the last question is on, I think Maishkar sir had earlier mentioned the point on transfer of assets to the public InvIT. This 2,500 crores is the enterprise value or equity value which you mentioned?
Equity value.
So equity value. So at least even if it is levered at 30%, it could be 3x, almost 7,500 crores worth of assets can get transferred.
Not so high because some of the projects we have delivered, but I will still say the same answer, that request you to wait for a few more days till the concept paper is out.
And so this IRR here will be like IRR or the discount rate will be at least like double digit, early double digits here?
Parikshit, again, let's wait for a few days, the concept paper.
Sure. Okay, sir.
We can reconnect on that.
In this last thing, sir, last year we had some good orders coming in from Ganga Expressway and some of the BOT projects which have come. So, what's the sense on ordering, state and central ordering on the BOT toll project for this year, FY23?
I think even for this year, we expect 10 to 15% of the total awards to come up on BOT. And given the consolidation that we have seen in the BOT number of players that have been participating, I think there will be good growth opportunities spread out during the year for BOT players.
Okay, sir. Thank you. Those were my questions. Thank you.
Pleasure.
Thank you. The next question is from the line of Alok Deora from Motilal Oswal. Please go ahead.
Good morning, sir, and congratulations on decent numbers. Sir, a lot of questions have been answered. Just few questions. So one is, what would be our normalized other income going ahead? Because in last couple of quarters we have seen some kind of one-offs. So what's the normalized other income which we can work with?
I think it will be close to 40 to 45 crores of other income on normalized basis per quarter.
Right, but we have one more arbitration award, so that will also that will also reflect in by when that will come through.
It should be coming in the first quarter, to my understanding, because the public input, it is a pass through the public input. So the procedural aspects on that have been completed. So it should hit the numbers in the first quarter.
Sure. So some of it will come in that also.
Yes.
Oh. And sir,
I would like to add here that if you have noticed for the last 5-6 years, whatever projects we have completed, there are arbitrations and disputes that are ongoing with NHAI. And you will appreciate that now almost 4-5 years this has been going on. So my own sense is that over the next 4 to 5 years, you will see some award or the other that will keep coming, and this would, to my understanding, become a profit center for next good number of years, where you will see one or two awards that will keep helping the balance sheet on an annual basis. So to my understanding, this is going to be a big number that we will see unfolding over the next few years.
Just to add that, whatever the expenditure is already expenditure for those projects already incurred, and the cash flow we have not factored in our business plan. So then definitely that will be the additional cash flow which will be available to the company.
Sure. And sir, in terms of order book, like if you see it's around 16,000 crore worth of order book, and some big projects we have won recently, so not really started till now. So based on the order book and the current execution run rate, what's the outlook on growth, and how many orders we are looking to win, what quantum in FY22?
So I would say that we today have around, as Tushar said, 5,000 crores of construction execution is what we are targeting for the upcoming year. And now you have around 2.5 years of visibility on the order book, on the construction order book alone. So it's a good visibility on the order book at this point in time. As you rightly said, there are three projects which are about to commence construction. And as I said, for the pending HAM as well as Ganga Expressway, we have received the final sanction, and post documentation very soon we should be in a position to announce the financial closure. So even those two projects will hit execution. And with that happening, I think all the projects would then be under execution phase. And during the year, we'll again try to rebuild the same order book position with which what we are starting this year. And that is what the target would be, that maintain the order book near the present level.
Sure, sir. And regarding this public InvIT transfer of the project which you mentioned about, so I mean, it's been some time since the public InvIT got any new project after the Amritsar Pathankot. So this concept paper, floating of this concept paper, what would be the timeline like? Because this concept paper will float, and what would be the timeline to materialize that?
Okay, so the way I see this is the concept paper will be out in the coming month, and once that is out, the consultative process, to my mind, should take a quarter, because it will be a fragmented base of unit holders who we will have to reach out to. And once we have their sense on what kind of appetite they are looking at for public InvIT, what kind of funding option they would be wanting to be taken up, then a formal proposal in the second quarter can be made out to the public InvIT. And in the third quarter, you can expect the execution of the voting, and thereafter public InvIT raising resources, and then early next year, that is around Jan-Feb, one can expect the transaction to culminate. If I mean, this is the broad timelines that come to our mind. I mean, this is how the whole thing will play out.
Sure, sure. Because in Amritsar Pathankot, I think it was a slightly shorter time frame of around 5-6 months when we had kind of closed the transaction. So.
No, you are right. But here we will have to reach out to investors to understand their appetite, and only after that can a formal proposal be made. So we would not like to make a formal proposal without knowing the mind of the investors, and that is why to reach out at Walcross, we need the concept paper, so that we can reach out to them, explain the project rationale, and once they are comfortable, then make a formal proposal.
Sure, sir. Sure, sir. Thank you so much, sir, and all the very best. If I have more questions, I will come back in the. Thank you, sir.
Sure. Thank you.
Thank you. The next question is from the line of Kaushik Poddar from KB Capital Markets Private Limited. Please go ahead.
This year, I mean last year for FY22, we see that on the BOT segment, your revenue from operation is around 1,800 crores, and PBT is only 42 crores. So, how do you see this financial year when things are normal completely?
I think, as we explained earlier also, the last year the Q1 was impacted because of the second wave of COVID, and this year we expect a normal year, and we have received 10% tariff revision on Ahmedabad Vadodara. So considering that, we expect a healthy growth in the toll business, and there will be a profit to the tune of 300 to 400 crores in the BOT segment.
That is, you're talking about PBT, right?
Yeah. Huh? And also, if you see these projects, both the projects AV and MP, in AV we have already received the reduction in the interest rate, which will also contribute in the savings of interest and improvement in the PBT. Further, MP TOT is also in the process of having the reduction in the interest rate, which will again contribute to the savings. So roughly with this savings, there will be another 80 to 85 crores saving on account of interest, which will improve the PAT.
Now, you are talking of 400 crores PBT or 400 crores EBITDA? That's what I wanted to know.
300 to 400 PAT.
PAT. Okay. And just one clarification.
In the BOT segment, you have something like other income of 40 crores. What is that 40 crore for? What is this other income in BOT segment?
So in BOT, if you see, we collect toll daily basis. We invest those funds on a liquid fund and generate some returns. Some amount is from those investments, and the other is towards the DSRA in the projects which generate, which is in the form of FD, also contributes to the other income.
Okay. Thank you.
Thank you. Ladies and gentlemen, this was the last question. I now hand the conference over to the management for closing comments.
Yeah, I would like to thank all of you for being on the call to understand the rationale of the numbers and the outlook for the upcoming year. And we would be glad to connect again upon declaring the unaudited first quarter result. Have a great day. Thank you so much.
Thank you. Ladies and gentlemen, this concludes your conference for today. We thank you for your participation and for using Research Bytes conferencing services. You may please disconnect your lines now. Thank you and have a great day.